Have you ever wondered how the stock market works? Well, think of it as a bustling marketplace, not for fruits or vegetables, but for shares of publicly held companies. Imagine a giant global network, a meeting place where buyers and sellers come together to trade these shares. From Wall Street to Tokyo, a myriad of transactions unfold every second, every minute, every day. It's a fascinating world, isn't it? So, the stock market is essentially a giant global network where countless transactions occur every day. Now you may ask, how does this grand marketplace function? Well, it's quite a fascinating process. Let's start with the companies. When a company decides to go public, they conduct something called an initial public offering, or IPO. This is essentially the company selling parts of itself in the form of shares to the public for the first time. These shares are then listed on a stock exchange. Think of it like a giant global marketplace where buyers and sellers come together to trade. There are several stock exchanges around the world, like the New York Stock Exchange and the Nasdaq. Now, on to the investors. Investors can buy these shares, essentially purchasing a small piece of the company. If the company does well, the value of these shares increases. If it doesn't do so well, the value may decrease. But how do these transactions occur? That's where stockbrokers come in. They act as the middlemen, facilitating the buying and selling of shares. And what determines the price of these shares? It's all about supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell a stock than buy it, the price goes down. This constant fluctuation in prices is what makes the stock market so dynamic, with prices changing throughout the trading day. In essence, the stock market is driven by supply and demand, with prices constantly changing throughout the trading day. So, what should you remember about the stock market? First things first, the stock market is essentially a marketplace for the trading of company shares. It's not much different from a farmer's market where goods are bought and sold, except the commodities here are shares of publicly traded companies. Now, the prices of these shares are not set in stone. They constantly change, and this fluctuation is driven by supply and demand. When more people want a certain stock, the price goes up. When more people want to sell a stock than buy it, the price goes down. Don't forget about the key players, stockbrokers and stock exchanges. They are the facilitators of these transactions, connecting buyers with sellers and ensuring everything goes smoothly. And finally, remember this. The stock market isn't a roll of the dice. It's a financial platform where educated decisions, not luck, can lead to potential profits. Remember, the stock market is not a gamble, but a financial platform where informed decisions can lead to potential profits.